Welcome back everyone to another video here with Invest for Tomorrow, and all I ask for in return is for you to smash that like button to let me know you watch this video, and stay tuned to the end because we have a lot to cover. And if you learned something new, subscribe to the channel. So here we are. Mix Fitness is the website I have pulled up. I definitely recommend checking it out so you can see a little bit more about the company and what they have to offer. This is one of the companies that's part of the merger deal, and we're going to look at the second one and under what ticker symbol right now the SPAC is and what it's going to turn into. So Beachbody is the second one that's part of the merger deal. Definitely check it out, beachbody.com and mixfitness.com. So right now, here's the chart of where FRX sits. The highest that it reached when the merger was announced was $18. It's sitting at $11.23 currently. So let's look at what you should know about the SPAC merger. So the first thing is the SPAC merger, right, is set to happen very soon. And we're going to look at that in a moment at a valuation of $3 billion. Now, when we come down here, we could see when the merger is set to happen, and it's the second quarter of 2021 at a valuation, once again, of about $3 billion. And working out at home became a norm during the quarantine and during COVID-19 times, and we're getting closer to post-COVID times, and we're still in the midst of it. And once we get out into true post-COVID world, many consumers are still expected to stick to at-home fitness options, which creates a positive outlook for companies like Peloton, Mix, and Beachbody. I like that in this article they put Peloton first to kind of emphasize who's the leading one in this industry and the potential that Mix and Beachbody can have. At a $3 billion valuation at around $11, this could have room to 10x if it does the same performance as Peloton. But I want to be a little bit more conservative, and we're going to look at that in just a moment. But I would say this has room to 3x, 5x in the near future, in the year that unravels and the future as it continues to grow, because the market share in this sector is growing and the companies that are going public are the ones obtaining the most of it throughout this process. So post-COVID world, which is the years to come, this is going to continue to grow. And we can see here how Beachbody has been consistently expanding its market share in the 1.5 trillion health and wellness industry. So there's a lot of room here. There's room for Peloton still. There's a lot of room here for Beachbody and Mix Fitness, right? So let's go ahead and pull up the chart again here for FRX. We could see that it's sitting at $11. The merger is set to happen the second quarter of 2021. We want to keep that in mind. And it's going to be at a valuation of $3 billion. I was thinking about Peloton because I already looked at it. So when you go to Peloton, it's $34 billion and it's sitting at $117. I'll never forget talking about this one way back here, September 10th. And it definitely had a pullback, and it ran up again to 138, pulled back again, and it ran up to 170 since I talked about it in the 90s. Okay, this definitely had room, and it's sitting now at 117 at a valuation of a market cap of $34 billion. So if FRX, right, has the opportunity to come out and be public at $3 billion, and it does just half of what Peloton has done, or even not even half, even about, I don't know, 1/3, let's say, there's still room for 3x to 5x for FRX. Think about that for a second. So as you can see, the highest point was here at $18, and the lowest was close to $10 and some change, and we're sitting at $11.23. Do you guys think, and this is my question for every single investor, I look forward to seeing your comments down below, do you think this could reach Peloton's levels, or just do half of it or 1/3 of it? Because one of the biggest questions I have for myself is, two companies are merging in this SPAC, and if they're both bringing in revenue and they're both growing, and it's not just cycling at home, but also you have Beachbody, which is a subscription at home of videos, Isn't that something that could probably branch out even bigger and get a larger market share than Peloton? That's something I'm asking myself. So I look forward to seeing your guys' thoughts on that, and comment down below. As always, guys, thank you guys so much for watching, and let's make some money. So the ticker symbol you want to add to your watch list is GNUG, Golden Nugget Online Gaming Inc. And all I ask for in return is for you to hit that like button to let me know you watch this video. And if you're a new viewer, don't forget to subscribe so you don't miss any more of my videos. So here we are. Golden Nugget Online Gaming has had a lot of good news as it's been pulling down. Now, the overall market was pulling down, but the stock was being short sold tremendously. Now, it was going to have a reversal at some point, and we're definitely seeing that happen here after hitting that low of $12 and some change, and it's sitting now at 16.75 cents. Now, there is still a lot more potential here for this company. You don't want to miss out on knowing about this company, and if you don't have it on your watch list, there's no better time than now to start watching it, because based off of how it's ran up so fast, there will be a point for this to pull back a bit or even consolidate, showing signs of another opportunity before it takes off again. Like I always say, you want to look at these stocks like a hawk when they're consolidating or pulling back, because that's the next opportunity before it gets to the newer levels. Now, as it was going down, this company was expanding to many different states. I don't know if you guys are aware, but online gaming is prohibited in many different states, and it's slowly becoming a norm and going from a taboo to a norm and becoming accepted globally, nationally, and so forth. So this is something that hasn't even reached its potential. It's just getting started, and the company itself so far has been profitable. Even though it's not a lot, it is a profitable company, which is a good sign, and profit has grown year over year. I look forward to seeing how 2020 completely shows up in the next coming months if they go ahead and show us the annual. And I look forward to the quarterly for 2021 going into 2022 and the years to come. Now, another one in this same sector is DraftKings. I mean, if we look at DraftKings, how it's actually gone through some volatility. I mean, it ran up, fell back down, and then it started way down here. That tells you everything about this sector. And it hit a high here of 19, came back to 11, ran up to the 40s, pulled back, ran up again, pulled back again tremendously, and then it's been taking off since. So it's going to take some time for GNUG to prove itself and go through all this type of volatility. But when you think about it, the reward is there, right? We've already seen it with other companies, and DraftKings has a market cap of 28 billion, right? That gives us some insight on what GNUG's potential could be once it reaches 28 billion or almost 30 billion. And let's look back at GNUG's market cap currently. Now, before I go back, actually, let's look at their quarterly and their annual for DraftKings isn't even profitable. GNUG is profitable, even though it's not a lot. They're making more money than this company because they're not taking home anything. So we need to see DraftKings in the near future. But if DraftKings has this much potential, it's because a lot of people feel hopeful and excited for this sector. This sector is going to explode. And if you look at all the companies within the same sector, it can give you some insight. So here we are. Their market cap is 1 billion. 1 billion. GNUG's market cap is 1 billion. You know what that means? By the time it gets to 28 billion, this will definitely be a lot higher than $16 a share. So the room and potential is there. This could possibly reach those numbers that DraftKings already reached, or probably even break through it as it continues to grow. Now, their revenue and profit need to grow tremendously. They're only in the millions. They need to reach bigger numbers and closer to the 1 billion or half a billion or 2/3 of a billion, 500 million, 750 million in revenue and a net income of like 200, 300 million. This company is going to show a lot more strength and it's going to blow up. Definitely look up more information on this company, but this is definitely the time to watch this company, especially after hitting this dip, pulling back up, And if it has a consolidation period or a slight pullback, I mean, the opportunities are endless with all the room this sector has and where this company lies, right? So as always, guys, if you found this video helpful and informative, don't forget to hit the like button, subscribe if you're new, and share it with your friends and community. And thank you guys so much for watching, and let's make some money.